Welcome to our video on understanding the basics of stock market investing. In this video, we'll explore the essential concepts you need to know to start investing in the stock market with confidence. Whether you're new to investing or looking to refresh your knowledge, this video will provide you with the tools you need to make informed investment decisions. The stock market can be overwhelming, but understanding some basic principles can make it much more accessible. First, let's talk about risk and reward. Stocks offer the potential for high returns, but they also come with a level of risk. It's important to understand this risk-reward trade-off when choosing stocks to invest in. When investing in the stock market, it's important to remember that stock prices are determined by supply and demand. As demand for a stock increases, the price goes up, and as demand decreases, the price goes down. Understanding these trends is key to making informed investment decisions. Another important concept to understand is diversification. Diversification means spreading your investments across different stocks and sectors to reduce the overall risk of your portfolio. By investing in a variety of stocks, you can reduce your exposure to any one company or sector. Keeping an eye on the performance of your investments is crucial. By regularly tracking your stocks, you can spot trends and make adjustments as needed to keep your portfolio aligned with your goals. This can involve buying and selling stocks, as well as adjusting your overall investment strategy. Finally, working with a financial advisor can be a great way to get expert guidance and ensure that your investment strategy is aligned with your long-term goals. A financial advisor can help you develop a personalized investment plan, select the right mix of stocks, and provide ongoing support and guidance as you navigate the stock market. Now let's dive a bit deeper into some of these concepts. When it comes to risk and reward, it's important to understand that different types of stocks carry different levels of risk. For example, small-cap stocks, which are stocks of smaller companies, tend to be more volatile and carry more risk than large-cap stocks, which are stocks of larger, more established companies. Understanding the risk associated with different types of stocks can help you make more informed investment decisions. Staying up to date on financial news and market trends is also crucial when investing in the stock market. By reading financial news articles and following market trends, you can gain valuable insights into which stocks are likely to perform well and which ones to avoid. When it comes to diversification, there are a few different strategies you can use. One common approach is to invest in stocks across different sectors, such as technology, healthcare, and finance. Another strategy is to invest in stocks across different geographies, such as domestic stocks and international stocks. By diversifying your portfolio in these ways, you can reduce your overall risk exposure. When it comes to tracking your investments, there are a few key metrics to keep an eye on. One important metric is the price-to-earnings (PE) ratio, which measures a company's current stock price relative to its earnings. Another important metric is the dividend yield, which measures the annual dividend payout relative to the stock price. By monitoring these and other metrics, you can get a better sense of how your investments are performing and make informed decisions about when to buy or sell. Investing in the stock market can be a complex and sometimes overwhelming process, but with the right knowledge and strategy, it can also be a rewarding and lucrative one. By understanding the basics of stock market investing, you can make informed decisions and take advantage of the opportunities that the stock market has to offer. Thanks for watching, and happy investing!